But from a financial stability point of view, you look at the sort of, historical benchmarks, PE ratios, forward ratios. Yeah, things look stretched compared to those. So that doesn't mean there's a problem, but it does mean you need to take that risk on board. The other risk we've been highlighting is we've seen very large growth of hedge funds in the sovereign debt market, and to some extent, that's been very welcome. They've been very efficient in buying and distributing government debt. There's lots of issuance out there. Governments need investors. But a lot of this is being done with a lot of leverage, very short-term leverage, and that does make you, a lot of it overnight in the repo market. And that does make you nervous that if there was a period of volatility and haircuts in repo markets went up, or there was some disruption in repo markets, you could get a rapid unwind. Again, part of our job is to sort of, markets do a good job of seeing the risks that they face individually. They have a harder time seeing the systemic risks. These trades are very low risk for each hedge fund, but when they're all doing something similar, there could be a systemic overlay. And the idea is if we can point that out, the market can guard against that risk.
So, yeah, I mean, look, Kevin has referred to the financial crisis a few times, and he's absolutely right to do that. And one of the big questions at that time, or before it, was, is the subprime mortgage market going to be, in a sense, the trigger and the cause of a wider financial crisis? And, we didn't get that call particularly right, frankly. But the thing that we have to bear in mind is what we're trying to look for here is sort of tail risk. Is there something in these markets that could trigger a wider consequence in terms of financial stability? And that's, as Tiff said, that's what we're trying to do. Tiff leads the work in the Financial Stability Board globally to do that. So, we're absolutely right. So we look at the increase in leverage in core government bond markets. I mean, these markets have changed substantially. I think the thing we've seen actually in the course of the last few months is an increase in leverage in equity markets. So you look at hedge fund leverage in equity markets, you look at leveraged exchange-traded fund markets, those things are changing. If you look at private credit, the questions we're asking is, are those the things that actually can move from tail risk into a broader consequence? So then you have to say, what are the channels through which it can happen? So at the Bank of England, we're doing a second system-wide exploratory scenario to ask that very question about private credit. That's our job.
Do you see any other broader risks emerging? And do you agree with the characterization of stretched for the market?
So, we are looking, obviously, yes, we do look at asset valuations because you are living in a world, you've seen this obviously over recent months where you've got quite a divergence between how, bond yields are moving and how equity markets are moving. Now, I think a lot of this comes back to what Kevin was saying about AI. I think it's explicable in broad economic terms. But the question is, is that going to lead to some wider stability issues? So that's on the list. And then going back to what I was saying earlier, I don't want to reopen it again, but frontier AI is obviously high on the risk as well. So we've got quite a list of things that we're looking at the moment.
I wonder if you, Chairman Warsh, see any signs of excess, trillion-dollar IPOs, high margin debt that was referenced, other things that are going on in this market that remind you of those other times.
Well, I would say I've been out of this business for 15 years, but I still have the scars from the global financial crisis. I suspect my colleagues do too. We take risks seriously, and that's part of the reason why each of us, I think, at the core have sort of a reformer's heart on this. What can we be doing in the conduct of monetary policy? How should we be revisiting fundamental reforms to supervision and regulation? How should we think about the payment systems that connect us all? So this conference is principally about monetary policy. I must admit, my first 4 weeks at the Fed, my attention's been focused on monetary policy, but our governments have tended to give us larger jobs than that. We take it all very seriously. I'm not prepared to sort of make a broad comment denoting risks that are available in the system, but I will say this. This is the biggest time of consequence to each of our economies, I think, in our lifetime, maybe absent the shocks of 2008 and the COVID shocks, the dramatic change in how businesses do business, how households are thinking about employment and inflation. And so this is a time we have to go back to first principles. I know at the Federal Reserve with my colleagues, many of whom are here, we're doing that. So I don't want to sound complacent. At the same time, I do want to say, at least for the United States, this is a time of huge opportunity. And if the Fed can deliver on its remit to deliver prices, I've never been more optimistic about what the growth engine of the U.S. could produce.
The growth outlook of the U.S. economy this year is
we're playing Mad Libs now?
Yeah. Fill in the blank.
So I would just say this. Over the last 4 quarters in the U.S., structural productivity is in the high 2% range. So potential growth looks like it's trended up. This is a time that the labor markets, hours worked, are relatively flat. History says that we go from periods of low productivity to periods of high productivity. Nothing is in the bank at this time of consequence. But if the last 4 quarters are an indication, which is really largely before the advent of the new surge in what artificial intelligence can do, I think there's reason to be optimistic. Now, does that optimism convey into policy in the next 6 or 9 months? Still too soon to say.
But strong outlook. Sounds like
you're back to forward guidance.
No,
I'm going to disabuse you
of
trying to extract that. My view, and my colleagues I think have said this better than I, my view is financial markets and the real economy work best. When you look at what's happening in the real economy, you make your own judgments. There has been a tendency, and I take plenty of blame from this, the 2008 crisis, where we were trying to suppress volatility, where we thought we needed to spoon-feed markets to get out of that. That was the right policy for a crisis. It is not the right policy for the time that we have now. And so sometimes unlearning is harder than learning, and I'm going to keep at it.
Okay. So President Lagarde, how do you think about the best levers to boost growth in the Eurozone right now?
Capital Market Union.
28th
regime and boost the venture capital. Okay, so that would be on the growth front. But I would like to add one thing. Thanks to the veterans at this podium and a few other people, we have a strong, solid, robust banking system, which is strongly well-regulated, well-supervised. And I think we should be cautious about what we are throwing away by way of simplification. So we do simplify things, and I'm delighted that, for instance, the ECB has done away with 40 different set of declaration disclosures that were unnecessary out of the 130 plus. So we have to go through that process. But I think we have to be cautious about how risks actually move. And risks were squarely in the banking system back in 2007-8 when we were all together fighting this global financial crisis. Risks travel fast. And there is no limit to the imagination of those in the financial sector who are trying to make money, as is their business, and who are taking risks. But the question is really who eventually ends up taking the risk and sweeping the mess. So I would contend that this regulatory work that we did at the time, we need to be very attentive, as Andrew suggested, to make sure that the risks that have moved and traveled afar through different structures, bodies, and the different names are also looked at carefully, and that the right measures are taken to protect the public good and to protect the principle of who takes risks bear the responsibility that goes with it.
The other big topic that I know that you all think about and is part of your remit is the balance sheet. And Chairman Warsh, you have talked about before you became Fed chairman that the balance sheet was too big in the United States. So it's at $6.7 trillion right now. What level would you be comfortable with it at?
No forward guidance.
No forward guidance, and I'm not going to give.
Balance sheet.
I'm not going to give. It's the balance sheet. Okay, we're just among friends. We have a task force for that too.
Oh, great. We're going to play drinking game on task force.
I'll say this: there is no secret that from the 2011 period when I was leaving the Fed through now, I wanted the Fed's balance sheet to be smaller, and I long wrote about and described Interest rates should be the dominant means through which we make monetary policy. If we're in a crisis, there could be a different set of rules. It's always struck me that interest rate policy is the fairest to the broad constellation of our citizens. Interest rate policy, whether we move it up or down, transmits its way into a new mortgage, credit card debt, transmits its way through a lending channel and credit channel. I've always had a view that the balance sheet works mostly through asset prices, works mostly through signaling effects. My 4 weeks at the Fed haven't disabused me of that idea. As we're hearing an alarm, that must be my way of saying that I've gone too far on the balance sheet. But we have a task force that you'll find out of outside people that are going to debate this topic, bring it back to my colleagues and me, to see whether we can have a judgment about whether the balance sheet should be made smaller. The only thing that I'll repeat here, which I've said repeatedly, is if there's a change in balance sheet policy, it'll be a change of my colleagues in the FOMC and the board. Those decisions will be well deliberated publicly, well understood, and will not be implemented until financial markets have come to understand what those are. It took us about 18 years to find our way into this big balance sheet, which again, in my biased view, borders on fiscal policy. It took us 18 years to get out of it. It'll take us more than 18 weeks to bring it down to size. I'm open-minded on the question. We're not going to prejudge it, but I want interest rate policy to be the working oar for monetary policy.
Governor Bailey, you've been focused on the balance sheet. I guess at one point we were asking how big can your balance sheets get, and now I'm wondering how small they can get.
Well, look, there's a nice sort of sense of irony I appreciate from this conversation, because I've been accused of having too big a balance sheet and reducing it too quickly. So, well, really. So can I go back to forward guidance for a moment, because I've really eschewed forward guidance on the balance sheet. So I really don't step into this world of saying we want ample reserves, we want big reserves, small reserves. My line has always been, we will meet the system's demand for reserves, because that's the system's demand for liquidity. Now, we will also spend a lot of time, by the way, understanding why the system wants the liquidity it wants. And also, the key other point, which Kevin has made very forcefully, is that's the way we actually implement monetary policy, through the short-term interest rate, transmitting out of our balance sheet into the system. And that works very well. So, our world is, look, we will meet the system's demand for reserves. We will seek to understand very closely why it's doing that. The other policy I have is that I want to take interest rate risk off the central bank's balance sheet, because, with a public balance sheet, interest rate risk should be in the market, not on our balance sheet. And so that's why we're moving to a repo asset side of our balance sheet, because that takes the interest rate risk off our balance sheet, which is what should be the case.
You mentioned you alluded to the political heat that you get over this issue. Does that influence the way you think about it at all? I know it's not supposed to.
No, I think we must have a sensible policy for moving to a system where our balance sheet reflects the system's demand for reserves. So yes, it went above that level during the QE period. It's coming down to that level. I want the interest rate risk off our balance sheet. Those are the policies we're pursuing, and I think those are the right policies. Speaking
of politics, do you get let off the hook, Governor Makhlouf, because the Prime Minister used to be in this seat?
We get some free advice from elected officials across the country. And, as I tell them, I appreciate understanding what's going on. It's a big country. I appreciate understanding what's going on across the country, but I don't appreciate telling me what we should do with interest rates. You've got your job, we've got our job, and that needs to be respected. So I'll just come back to the balance sheet. Interestingly, if you compare different central banks, you'll see a pretty wide range of sizes. In Canada, we didn't do QE in 08-09. Fortunately, in Canada, no banks failed. We did get a big shock, but it wasn't so big that we needed to invoke that emergency policy. We did use QE in the pandemic. It's the only time we have used it. But the fact that we only did it once meant that our balance sheet wasn't as big to start with, and we let the bonds run off, so our balance sheet has run back to its new steady state. And if you compare central banks, as I said, the size of the balance sheets can be pretty different. I mean, Canada's balance sheet as a percentage, Bank of Canada's balance sheet as a percentage of GDP is about a third of the Fed's. Now, look, Canada's not the world's global reserve currency, so yeah, there might be some differences here. But I think the results of Kevin's task force is going to be very informative to us. And the other thing I'll say about balance sheets is it's a very inside baseball kind of discussion. It's not the sort of thing most Canadians are really that engaged in. But it does, it is how we, there is an element of how do we implement monetary policy? What is the demand for reserves? We've spent the last couple of days talking about new kinds of money. What do those potentially mean for our balance sheet? So these are questions we need some thinking on.
In the short time that we have left, President Lagarde, I did want to get to you on this political point, and because you have been a forceful voice for central bank independence. I know you continue to do so, and you, I mean, unlike these guys, you have to battle more than 20 different governments and leaders. 21. So you're a pro at that. I'm curious if you think that there are, if you look out and see serious risks to central bank independence, especially in light of the Supreme Court ruling that we got in the United States, letting Fed Governor Lisa Cook keep her job.
Well, I think, the best way we can actually all do our jobs is to be, number one, accountable, number two, independent, and the two come together. When I go to the European Parliament on a regular basis to report on what we do, to explain what we do, that's the counterpart for this independence that we have. Staying in our mandate, the entirety of the mandate is also the sine qua non condition for deserving that independence, which is a precious good without which we would not do a good job. That's my view.
How did you feel about the Supreme Court ruling, Chairman Warsh?
We were doing so well. So before the Supreme Court, the Fed acted independently and followed its remit. After the Supreme Court ruling, the Fed will continue to do so. I read the opinion on the plane over here. One of the secrets of the productivity-led economic growth that I was talking about at the outset is because of the constitutional design in the U.S. It's the foundational element that has given us 250 years of outperforming expectations. I believe in Article 3 judges. I believe in the rule of law. We'll follow the Supreme Court decision, but day to day, the decision reaffirms what President Lagarde already said. We're calling balls and strikes as best we can. We're taking seriously the reform objective. And we're going to deliver on the high promise that Congress gave us to deliver price stability in the context of our dual mandate. And when we do that, we don't have to worry about politics. We don't have to worry about judicial intervention. We get to look in front of us because it's a challenging step.
Okay, we have a minute left, so I'm going to ask everybody one quickie for everybody. Two quickies, actually. Governor Bailey, I'll start with you. So favorite economic indicator right now?
Sorry, there.
Your favorite economic indicator right now?
Oh, that's a trap question as well. You see, that's a trap question into forward guidance.
Oh, God.
Yeah.
Thank you, brother.
I'm trying.
I'll tell you what, I'll answer it.
Oh, there you are.
My inflation forecast.
Oh, there you go. Governor Bailey, you have to answer.
Well, look, we look at a whole range of data.
Oh, God.
I mean, look, honestly, if you sat through our meetings, you would see more data than you could ever dream of. The other thing I say, look, I'll say this. I spend a lot of time going around the country, and I talk to a lot of businesses, and it's absolutely imperative that we stay in touch with the economy.
President Lagarde?
Inflation outlook, balance of risk, underlying inflation, transmission of monetary policy. Thank you.
Chairman Warsh.
I guess I have the last word. With the new with the data project, the data task force, my hope, my aspiration is that 9-12 months from now, we're going to be using new technologies to understand what's happening in the real economy in a contemporaneous, real-time way that positions us as central makers to make better decisions. that we're no longer going to have to rely solely on data that we get from government agencies with mismeasurement problems, that have surveys that are no longer relevant, that every business we know that are leading in our country are using new data sources to make better decisions. My favorite data is upon us. And if we do our jobs, we'll be here a year from now and we'll say we've discovered data that helps us make better decisions. And we live up to our promises, we strengthen our credibility, and politics stays at bay.
Least favorite economic indicator?
The conventional wisdom that we hear from time to time tells us nothing. Monetary policy works with long and variable lags, as we know, and many of these indicators are echoes of history. We need indicators that tell us what things are when we look out our window today. So when we make judgments, when we next convene, they're as close to real time as possible.
I thought you were going to say the dots, since you didn't do one.
I'm going to let one panel discussion go without me sort of wagering on the dots. There will still be dots for a short time, at the very least, but we have a task force for that, and we'll revisit it.
Do you have a least favorite economic indicator, President Lagarde?
What did you say?
Least favorite economic indicator that gets too much attention.
Those that are wrong.
Governor Makhlouf, help me out.
You know what I'd say is that especially a lot of the monthly data, it can be very volatile. And sometimes the market over-rotates on the last number. You got to correlate it with other things. You got to smooth it a bit. The last monthly number is never going to be the best indicator.
So I'll give you one that we're wrestling with at the moment and have wrestled with for years, and it's obviously relevant, which is oil and gas futures prices. So they are terrible indicators in history. The problem is that everything else is also a terrible indicator.
Very good. Finally, when we were coming into this year, everybody was talking about rate cuts. Is anyone still talking here about rate cuts? Show of hands.
Well, that's a nice try.
That's
a nice try at forward guidance.
All right, I tried. Thank you all very much for the candor and for your service.
I hope you enjoyed that policy panel. I know I certainly did. The Sintra Forum, as we've just shown, always brings together the leading voices of today. Not only that, but we invest in the next generation of economists who will shape the debates that will follow. Our final item of business this year is to recognise the best of this year's Young Economist submissions, as judged by an expert panel, while also taking your votes into account. It's my pleasure to now hand over to President Lagarde to award the prize. Thank you.
So congratulations to all the finalists of the Young Economist Prize. For all of us, you're playing a key role. Not so much because you're going to fund our pension fund going forward, but also because you are feeding us with new ideas, with your creativity, your research, and your energy. So you are clearly important to all of us, whether we are professors, central bank governors, and any other smart, including journalists actually, who have been paying close attention to what you do and what you say. So to all of us, thank you very much. So yesterday we had the pleasure of hearing this excellent group of PhD students, and you shared your research with us. Beyond that, I also hope that all of you had a chance to go and listen to their pitch at each and every stand where they were presenting their views, ideas, and the research that they have conducted. Now, reaching this stage of the competition, I have to tell you, in case you didn't know, is in and of itself, no matter who is the winner, a real achievement, because there were more than 100 applicants who all were PhD students, all came from the best universities, and they were all very, very good. But you cut that group of the top 10, and you are, as a finalist, a success. So bear that in mind when I'm going to have to give the name of the one who is selected. So your papers actually speak directly to the theme of this year's forum. How do we shape Europe's future? And they remind us how much we gain when we bring new voices, new ideas, new evidence into our discussion. Behind the scene, and to select actually the one who is the winner, it's not just the votes that you all have registered earlier on today. There was a selection committee which has been extremely busy evaluating the finalists' papers. They took into account academic quality, policy relevance, and of course they took into account the votes of the participants through the online voting portal. I'm going to actually ask them to please stand up when I pronounce their name, because they did the job of reading all these papers. You did not. Well, some of you did, but not so many. So I'm going to ask you to stand up. Seriously. Jordi Galli, please. Where is he? Is he gone? He went to the loo? Yeah. Hélène Ray. Hélène. And colleagues from the ECB, Philip Hartmann, the chair, Joao Sousa, and Sebastian Schmidt. Up. Thank you to all of you for this work that you did for us. Now, I would like to ask you, yet again, to applause, because the finalists are going to join me on stage. Please join on stage now. Come on. I think you're supposed to approach one at a time, if I understand. And I'm going to give each of you a certificate that includes your name and the fact that you are a finalist in this exceptional contest. Now, do I hand over now one after the other, or do I announce the one who is winning? Stage director, please. And then only the winner. Oh, gosh, okay. I'm sorry for you all. It's a bit grueling, but I have to do that. So, shall I receive them? Okay. So, calling you to join me is Simone Zanella Cavallero. Pedro Martinez Buruera. Max Martinez. Congratulations. Marina Hoch. Congratulations. Luigi Falaccioni. Congratulations. Lennart Nierman. Katerina Nikalipci. Géraud Desazard de Montgaillard. Sounds French to me. And Chen Xuan Shi. Congratulations. So now it's time to announce the winner of this year's Young Economist Prize, who will be awarded $10,000 and a trophy, which is going to be handed over to me now. And the winner is Lennart Nierman. So, just for those who don't remember you, you're a PhD student at the University of Cambridge, and your paper was on decomposing the investment channel of monetary policy. Thank you so much for your contribution, and thank you to all of you as well. So you can stay, you can go, whichever is your favor. I'm just going to give the concluding remarks, and that's going to be short. So we've now come to the end of the 13th Forum on Central Banking in Sintra. This annual gathering has been long part of the ECB institutional fabrics, and I think that there are two reasons why it is so important. First, as the past 2 days have shown, Sintra is where we come to challenge our own thinking. Fresh perspectives and rigorous debate, and what lead to more informed, more robust decisions, deeper research, better teaching for each and every one of us. And Sintra, for those who have attended many times, has always delivered that. The themes of past forums have captured the zeitgeist, the opportunities and challenges that Europe faces in each period. This year, shaping the future, innovation, growth and stability was no different. It brought together issues concerning people, technology and policies. We discussed on the stage and on the sidelines a wide variety and range of topics, from productivity to regulation, to financial stability, to migration, to tokenization, to trade. We even discussed the optimal design of dikes. Remember? And thanks to Sarah, we know that AI agents are just as bad as teenagers. And this year's topic cut across so many of the themes that we discussed, and this theme was clearly artificial intelligence. And no doubt we will be discussing that further and deeper in years to come. Some topics at Sintra have been stickier than others over the years. The productivity gap has been one of them, if you look back at the record. And we just keep coming back at it. And as we heard yesterday, AI is likely to be another one of those recurring themes. Now, whether a topic is new or whether it's a topic that we return to, the value of Sintra is the same. The chance to engage with some of the leading researchers in the world on the issues that matter the most, and to bring those insights back into our decision and processes. As a test of that, actually, because I observe very much all of you, there are not many of you who, during the debates, look at their emails. A few do. I see you over there. But very few do that. It means that the quality of the interventions, the quality of the papers, of the discussion, and of the panels are really at a very high level. Otherwise, you would all be scrolling and looking at something else. Now, the second reason runs deeper, because Sintra is a place where we actually reconnect as a community. It's a bit incestuous, granted, but we reconnect as a community. You've all known each other for a long time, and Sintra operates its magic because it's a special place. So we're very grateful to the Portuguese authorities and to our friend Alvaro, who has facilitated all this and brought us actually together. There are a few Portuguese friends in the room as well, and I thank all of them on your behalf. This year we welcome... So there were, as I mentioned on the first day, 11 new governors who joined us in that capacity for the first time. But there were many, many old faces and veterans of Sintra who came back together and welcomed the newcomers in their group. These friendships renewed, these new connections made, make Sintra a hard place to live. Okay, hands up, who wants to go now? None. I knew it. We don't want to go because it's such a nice environment and a place where we can actually pick each other's brain and debate ideas and challenge each other. And it's always difficult to leave friends anyway. There is a word which I learned from my Portuguese colleague, which is in Portuguese, which says exactly that, and it's saudade. Saudade describes this bittersweet longing for someone or something you love, felt more keenly as you prepare to say goodbye. The warmth of the moment already tinged with the knowledge that it is ending. Another way to say, if you didn't call, then I know it's you. So that is why Sintra leaves us with each year in that state of mind, saudade. But you know what? It draws us back to Sintra. So there will be another Sintra. That's the announcement that I want to make right away. And the dates have been set, but I don't have the dates in my briefing material. So, by way of closing, I would like to thank the organizers, the speakers, all of you, those who asked questions, the hard one, and those you thought were the dumb ones, who were always smart anyway. Now, one reassurance I want to give you before I wish you all a safe journey back after we've had this excellent dinner organized by the Portuguese National Central Bank. I have another set of remarks which I did not write, which I asked my AI agent to write to wrap up the conclusion of this meeting, having read, because he read, all the papers. It was dead boring. So that's what you're stuck with, what I wrote. Thank you.